Hey folks, this is John Miller, Executive Editor with WV News. We would like to welcome you to Ask the Experts, featuring John Halterman of Beacon Wealth Management. John is the founder, owner, and certified wealth strategist at Beacon Wealth Management. You can find out more at bwmwv.com. And now live from the studios of the Exponent Telegram in Clarksburg, West Virginia, let's Ask the Expert. Welcome to Ask the Expert with Beacon Wealth Management's John Halterman. John, how are you doing today?
Hey, I'm doing great. How are you doing, John?
I'm doing well. Listen, this time of year, people are thinking taxes, okay?
Yeah.
And we've talked a little bit about this in the past, but let's talk the difference between tax planning and tax filing.
You know what, John? That's huge. You know, this is what I see all the time. I see people that have huge tax burden, especially business owners. And what they tell me all the time is they went to their accountant, they took all the information they needed, and the accountant filed their taxes, and the next thing you know, they're paying this big tax burden. And they're like, wait a minute, why am I paying this burden? But I say to them, I said, well, what did you do to plan for reduction versus just file your taxes? And they said, well, what do you mean? I said, well, sometime throughout the year, what you should have done is you should have said, hey, look, last year I paid all this crazy in taxes. What could I have done differently? Could I set up a different type of entity? Could have I structured retirement plans differently? Could I have gotten different expenses? What are things that we could have done to actually reduce that tax burden? But seldom do business owners actually take the time to do that type of tax planning. You know, and always they have a tendency to just do tax filing. So there's a huge difference between the two of those things.
Now, you're talking businesses, but you can also help individuals with their tax.
Oh, absolutely. I'll give you a simple example of an individual the other day. I was talking to a person who is a state employee, and she was putting money into a 457 plan. And so I said to her, you're not getting matched on that plan. You're putting money in on a pre-tax basis. I said, do you know how it works? And she said, not really. She goes, I started it when I first went to work, and it's just what made sense. And so I was telling her, I said, you're getting this tax deduction. The money's growing tax deferred, but then when you go to ultimately retire and take the money out, you're going to pay taxes as earned income. I said, is that your intentions? And she goes, well, what's my alternative? I said, well, an alternative is to look at a Roth IRA. Instead of getting a tax deduction up front, she would not get a tax deduction on an after-tax basis. The money would grow tax deferred, but in the end, when she took it out, it'd be 100% tax-free if she met the requirements. And it would also be 100% tax-free to her family. She's like, well, that's a no-brainer. I want to do that way. And I said, but that's the difference. It's understanding these things, walking through how they work and the strategies and figuring out exactly what's best for you. Because just because 20 years ago she signed up for it one way doesn't make it right today. And I always say, if you're putting money away, you got to look at what you're getting from a tax benefit standpoint. So absolutely.
One thing you mentioned there about 20 years ago, because I think a lot of people lose sight of that, because when they start work or they get into a program and they're saving for retirement, they don't really revisit it until they get to that last little part of it. How often should somebody be talking to a person like yourself for that type of advice?
You know what? I prefer minimum once a year. It's no different going to a dentist, no different going to a doctor. You should have routine checkups. Somebody should be walking you through basically what I consider to be a wealth management checklist in various topics to make sure, what have you done in terms of reducing your income tax burden? Are there any potential capital gains that are going to come from the sale of things? What's your wealth transfer? Because, tax laws changed. Last year, Secure Act 2. Was one of the biggest changes in the last 40 years. There were over 100 tax law changes. And people don't realize this. I was just saying the other day that they raised taxes on you and you didn't even know it. And they'll go, what are you talking about? And I said, well, what they did was they raised taxes when it came to the beneficiary IRA. It used to be if you had a parent who had an IRA and you inherited that IRA, you could keep it in a beneficiary IRA to the day you died and then pass it on to somebody else. And you would only have to pay taxes as when you took it out or the required minimum distributions. So that meant that you had an opportunity to increase money for your own retirement by inheriting an IRA. Well, guess what? The IRS says no more. From now on, when you inherit an IRA, you have 10 years to empty that out. And so the difference is where you could have left it there 20, 30, or 40 years for your own benefit, now you've got 10 years because the IRS knows that if you empty it out, that creates an opportunity for them to collect taxes. So everything has changed in terms of how we look at beneficiary IRAs. And so, what I tell people is the IRS may not have raised taxes on the front end, which is where you would immediately know. But from an inheritance standpoint, that's a huge, huge tax increase that people are just not even aware of.
So we mentioned earlier there before we started videoing here that, it is tax filing season. So when you talk planning and filing, is it too late for the individual to make much impact on this
No,
year?
you know what? They can still make it because they have up to April 15th. And so they can make contributions to IRAs. They can make contributions to Roth IRAs. The biggest thing that I tell people is that one of the biggest mistakes that I see people make is they believe that they're over the Roth IRA threshold. And let me give you a simple example. A lot of times people will say, hey, I maxed out my pre-tax money and I have more money I could save. What could I do? And I would say, well, you can look at a Roth IRA. They said, no, I make too much money. Well, that may be true to open a straight IRA or Roth IRA, but you could do what they call a backdoor Roth IRA. And what that means is that you put money into a non-deductible IRA, okay? So there is no tax deduction. The IRS doesn't have any limitations on who can put it in there. And then what you do is you convert that to a Roth IRA. So if you're a high-income earning individual or high-income earning family not thinking you can do that, this is a way to save additional money that you couldn't do inside your 401k plan. So yeah, there's things like that you can do, but you can't wait. You got to act fast. I know that. You got to get this done by April 15th. So yeah, there's definitely things, but you got to be thinking, what can I do to create action?
Along those same lines, when should myself or any of our viewers start thinking about next year's taxes?
You know what? I always tell people, think about them third quarter. When the third quarter comes around, you got to be assessing. It's like going into that fourth quarter in a football game. The end's coming, but you don't want to wait till the last 5 seconds of the game. It's too late, So if you wait, to that in third quarter and you say, okay, here's where I'm at, assess what type of income you have, assess all those things, because now you could make year-end planning decisions. And so, yeah, I would rather you do it, in that time period, but it's not too late to do it this year. It's just, it's more limited because you can't go back and add to your 401k after the end of the year. But if you're still in that third quarter and you haven't, you're not completely maxing it out, well, you can do those types of things. And there's a lot of cool things that you can do in retirement plans now that you couldn't do before. A couple of simple examples. Simple IRAs are designed for small business owners, such as people who have less than 100 employees. Well, before there was only a pre-tax option there. Now people can put in on a pre-tax and an after-tax. So that's pretty cool because now it opens the door for these smaller plans. And there's a lot of medical practices that have those type of smaller plans. Another thing that's really cool, 529 plans. 529 plans are for children's education. And so what people always think about is, well, how if my children don't use them? Well, they're very mobile. You can transfer them from one child to another. But thanks to Secure Act 2, you can actually now convert them to a Roth IRA as long as you've had them for 15 years. So here I have a daughter who is 16 years old who we started the plan almost right after she was born. And if she decides that, hey, look, I've got scholarships, I'm not going to use this money, and we've saved a good chunk in there. Well, the cool thing is that I can convert that to a Roth IRA for her, and now down the road, she could get tax-free retirement because she did so well in school that she didn't need it for education. That's as cool as could be. And so that's, again, it's knowing tax law. You got to know tax law. You got to know the difference. And I always tell people, I don't know about you, but how many of you spent your holidays looking at the 100 new tax laws that came out? More than likely nobody did, but that's okay. You don't have to. You just have to find someone like myself who has that type of knowledge and go out there and figure out, okay, what can I do to reduce my burden?
Well, John, always a wealth of information. John Halterman, Beacon Wealth Management. Look him up next time. Thanks for joining us today with Ask the Expert. Ask the Experts, featuring John Halterman of Beacon Wealth Management, John is the founder, owner, and certified wealth strategist at Beacon Wealth Management. You can find out more at bwmwv.com.